You may or may not be into luxury watches, but the business disruption of the Timepiece Gentleman, also known as Gentleman Timepieces, who currently has a very successful reality-based lifestyle YouTube show, compels me to talk about it, especially through my experiential lens as an accountant and business advisor. The show is so well produced that it's something that you can imagine being on Netflix or television. The owners Anthony and Marco offer a captivating look into the gray market dealership of fine luxury watches. Hi, I'm Noel Lorenzana and I'm an accountant. If you're new here, welcome to my channel. If you're returning, it's good to have you back. I don't like to talk about myself because I want my videos to be about you, the viewer. But to put things in perspective, and if you're wondering what makes me qualified to talk about the subject of analyzing a business, do know that I'm an Illinois licensed CPA with decades of experience, and I started my career working in a Chicago-based public accounting firm conducting internal audits of private companies for almost 4 years. Here are my top 5 key problem areas that I see with the way Gentleman Timepieces operates their business. Number 1, extravagance and growing too fast. It's a luxury watch company. Part of luxury is excess and extravagance. The YouTube show is very successful and people are drawn to lifestyles of the rich and famous. But let's come back down for a minute. The watch dealership is first and foremost the main business, not the YouTube channel, at least for now. Without the business, there is no reality YouTube show, so let's forget about the YouTube part for a minute. Running a business is challenging since they're a gray market watch dealer. They don't get their watches directly from the manufacturer. They have to source or buy their watches from the secondary market or from ADs, which are authorized dealers. I estimate that their margins were about 10%. So if they were selling, let's say, a Rolex Submariner for $15,000, they were ideally making about $1,500 on the transaction. That's a 10% gross margin. Not bad for selling one watch. Keep in mind that they have lots of fixed expenses like rent, utilities, insurance, and payroll costs for themselves and their employees that need to be paid regardless. On one show, they spent over $17,000 on one dinner for the team to celebrate some milestone. That's 11 watch deals of the above example I just gave to even pay for that one dinner. These watch deals are hard work and difficult to come by. As you may know, luxury watches, especially Rolex, are in very high demand and in short supply. Don't believe me? Go to your local Rolex boutique and see what they have to sell you. There were lots of other extravagance, like gifting Rolex watches to employees, renting Lamborghinis, Rolex watch giveaways to fans, frequent expensive dinners, and the list goes on. This extravagance is not looked at kindly by the IRS as well. If examined, the IRS can disallow the extravagant expenses because they don't meet the guideline of an ordinary and necessary business expense. Growing fast is exciting, but growing too fast can often crush young businesses as well. When a business is growing fast, they usually become quickly understaffed and unable to handle the volume of work. Important tasks like administrative work, maintaining the bookkeeping, reconciling bank accounts, managing employees, maintaining adequate insurance, paying the bills on time, can all fall to the wayside for the sake of generating top-line revenues. In one episode, Anthony was irritated because his operations manager, whom he relied upon heavily, had wrong information on outgoing wire transfers. Anthony insisted that some watches had already been paid for, and later his operations manager finally agreed. To me, it looked like some watches could have actually been paid for twice. In their business, that is not something you can get wrong. Number 2, lack of business experience. Anthony and Marco are smart and intelligent, but from what I can see, they both lack proper business experience. Now, when I say that, I mean specifically experience actually running and managing a small business. Sure, you can figure it out as you go, and that's definitely what they are doing. There are 3 areas of business vital to business success, and those are sales and marketing, business operations, and accounting and taxes. Performing poorly in any of these areas can be detrimental to your business. For example, if you're great at generating new business but you aren't able to deliver your product or service in time, you'll struggle to retain those customers for long. If you do a great job of delivering your services but aren't marketing your business, you'll have trouble replacing the customers who turn over. Lastly, failing to track your finances properly can cause many problems, including an unprofitable business, tax compliance problems, and problems with the IRS or other taxing agencies. In my experience, most businesses do well in one area, okay in another, but poorly in the other category. In the case of the Timepiece Gentleman, let's say they did great with sales and marketing, okay with business operations, and poorly with accounting and taxes, but this was probably outsourced for the most part. Most business owners focus either on increasing sales or on business operations, so Anthony, with his vibrant and charismatic personality, and Marco, the technician, very knowledgeable about watches, probably realized their need for help with real-world business operations, so they hire Mike as their operations manager. From what I saw, I don't think he was as effective as he should have been. On the surface, he looked good and he sounded good, but where it mattered to me, it seemed that he was dropping the ball. Inventory and the sales process appeared to be tracked on a computerized spreadsheet that seemed as though everyone had access to. If this is true, it's not a good business practice. Perhaps Mike's ability to do things right or the way he wanted to was hindered by Anthony. After all, he's the boss and it's his way of doing things. I don't know the specifics, so I'm just speculating based on what I can see from their videos. Ultimately, the business operations were handled maybe average at best, and for a rapidly growing company, it was definitely inadequate. Number 3, weak internal controls. Internal controls are the procedures implemented by a company to ensure the integrity of financial information, promote accountability, and prevent fraud. It allows for complying with tax laws and regulations and preventing employees from stealing or committing fraud. There are 2 types of internal controls: preventative and detective. Preventative internal controls are designed to prevent errors or fraud from happening. Detective internal controls are designed to catch items that may have been missed during the normal course of business. For the Timepiece Gentleman, I would recommend utilizing separation of duties in several areas of their business, especially operations. This ensures that no single individual in a position to authorize, record, or take ownership of a financial transaction along with the underlying physical asset. An example would be if a watch is purchased. There should be a process to receive inventory by 1 or 2 responsible persons only. The process should be well documented. Items received should use a fixed sequential numbering system. Every watch should have a documented physical paper trail. This ensures that every watch received has proper accountability. Ideally, another person should then be responsible for recording the item in inventory using database software. The purchasing/inventory records should also show if and when an item has been paid for, along with the details. A computerized spreadsheet should not be used for this. It's too easy to anonymously modify or delete information, especially if the entire team has access to the spreadsheet. To prevent duplicate outgoing wire transfers, a system should be in place to actually make the payments only after they have been approved by, say, Anthony or Marco, the owners. At this step, a detective internal control would ideally be in place to ensure that a watch couldn't be paid for twice. In addition, bank statements should be reviewed regularly and reconciled internally by management. At this step, duplicate wire transfers could be easily identified. Since there are 2 owners active in the business, I would make it a policy to have them both sign off on any outgoing payments or transfers over $5,000. You might be thinking that all these steps will slow down operations. It might, but it will also ensure accountability and the integrity of the business's assets. Another glaring internal control weakness is access to the store's safe. It's inadequate, and there appear to be no procedures as to who and who can't access watches in the safe. This needs to be fixed. In one episode, a Rolex GMT went missing. Marco looked all over the store for it and couldn't find it. Finally, it mysteriously appeared back in the safe. Number 4, lack of capital. Inadequate access to capital is a big factor in small business failures. The Timepiece Gentleman apparently have a big moneyed secret investor who helps fund their rapid growth. Now, I don't know any specifics about their working capital situation except what I've seen on their show, but in May of 2021, they announced a program to raise $2 million by offering spots to 1,000 private investors at $2,000 each. These private investors are their fans and followers. The proceeds would be used to fund the design and furnishing of their new store. In return, these fans/private investors would receive access to a private Facebook group where they could purchase luxury watches at wholesale prices. To me, this creative capital raise suggests they may have working capital issues. Something doesn't add up here. According to Anthony, if their week 19 sales totaled $765,300 from 31 watch sales, and their weekly profit was $79,585, then they should be doing extremely well financially and shouldn't need to ask the public for money. Number 5, inadequate security. The Timepiece Gentleman sells a huge volume of watches each week. Let's round up and say they move almost $1 million worth of watches every week. That's a lot of money, and in turn, a lot of business risk in terms of risk of loss due to theft, robberies, or lost and misplaced watches. Personally, I did not see any security measures to protect themselves, their employees, their store, or their inventory. In my opinion, security for them should be prioritized. They need state-of-the-art surveillance equipment, security doors, access control systems, and ideally armed security. All of these are theft deterrence and protection measures, and in their line of business, it's absolutely necessary. I see businesses close their doors more than most people by being an outside accountant. I've owned and managed businesses, and I know the intimate problems that business owners face. The faces change, but the stories all have similarities. I wish the Timepiece Gentleman the best of luck with their business, and I tip my hat off to their successes. Their YouTube show is top-notch, and I highly recommend checking it out. I hope you found this video enlightening. If you did, please consider hitting the like button and subscribing to my channel. If you have a question, leave a comment below. My name's Noel. I help people who don't have their own personal accountant by answering not so common money, business, and tax questions. Let me know in the comments if there's a topic you'd like me to cover. Thanks for watching, and see you in the next video.